We are live and streaming. A very warm welcome to all of our members and the entire Vitrina community for a very special conversation that we're going to have with Sean Atkins. Sean, what a pleasure to see you again.
Great to see you again, my friend.
Sean Atkins is with a very exciting digital media company, which he'll talk a little bit more about as we go through the motions of our conversation. Dhar Mann Studios, which is essentially a digital media trending hot brand right now, and we are speaking to its newest CEO, Sean. Congratulations are due. Just got the news.
Thank you. Thank you.
Fantastic. So one of the key things that we do, in our podcast and in LeaderSpeak is really highlight key disruptors, key innovators, key thought leaders who are really disrupting and changing the entertainment supply chain. A host of our members are very curious, Sean, about AVOD, about YouTube, about creating a digital media business. And you've actually seen both sides. You've been on the traditional side. You've been on the newest kid on the block, where you are now leading the show. So this is going to be an exciting conversation. And to get us started, Sean, would be a great idea to maybe start with an elevator pitch of just the company and what the company does.
Sure. So Dhar Mann Studios was founded by Dhar Mann, so it's named it after Dhar, who's the founder. And his mission was always to create inspirational, narrative scripted content that makes a positive impact on people across the world. And so the company publishes and produces about, call it 5 half hours of television of brand safe scripted programming each week that all are about compassion and kindness and altruism. It resonates with all ages around the world. So it's a family brand. It's all written, directed, and produced in-house at our 100,000 square foot studio. And we probably do about 1 billion views per month, have about 136 million followers across platform. And Dhar Mann Studios is the largest scripted studio in all of digital around the world.
That is incredible. I mean, some of those numbers are staggering. And again, no wonder it's been in the news of late. And there is a lot of buzz about the brand at this point that we're picking up. So clearly, you've just explained that some of the reasons on why it's been sort of trending so much. One aspect also that wanted to sort of also get from you is a little bit about your background. Like we mentioned, right? You've been on the traditional side. You've been with great brands, MTV, Discovery, Jelly Smack, and now with Dhar Mann. And it would be great to sort of get a little bit of your journey and how you sort of see that entire thing converge now in the present assignment.
Yeah, look, I am a kid of the 80s with all the kind of media explosion from cable to syndication to movies, right? I was one of those people who saw like 50 movies in the theater as a kid. I had video game systems. All the explosions that we're sort of seeing today sort of happened in that kind of Gen X timeline. So I entered I went to film school, and my first job was at Disney, which is a great place to learn about consumer facing businesses. But because I came from a very entrepreneurial background with my family, I always sort of had the DNA to kind of be where they sort of say where the puck is going, right? So my career has really been built at where the intersection of consumer behavior shifts, technology, and media have intersected several times. So, most of my classmates were going into film studios or one of the 3 broadcast networks, and I went to this very tiny thing called cable. Right. When I joined Disney Channel, which is huge today, it was only I don't think we even had 1 million subscribers. So it was a really tiny little startup. I was employee, I think 63 or something like that. And so that sort of beginning of my career has really been what's happened is every time there's been a shift in sort of consumer behavior, I've been sort of out there in the forefront working on things. So I got to go through the beginning of ad tech. My first venture-backed company was in ad tech. I was one of the first people at Disney to build an internet-based company, and that got rolled into what today is like Disney Online, right?
Wow.
Then I went over and I did streaming back before that was a thing, right? With HBO Broadway, which today has changed the name so many times, is coming back. Just changed the name again. I did reality TV before that had a name as a startup there with a gentleman named Arthur Smith, who built a big, huge, successful company that had an exit there as well. Time at Yahoo. I built a podcast business that's now the core of iHeartRadio. So really my career has been around all of these changes that your company is sort of identifying. Um, and sort of how do you build a business when sort of you have one foot in the traditional thing, but the audience is shifting to a new platform.
Fascinating. And again, there are so many dots that connect to present day, where the business has shifted and changed so much. And again, I'm kind of hoping to capture a little bit of that for our members who are curious to sort of also pivot their own businesses. And there is just so much of buzz right now and curiosity about that. So just to sort of give us a snapshot of the business and the way it stands today. uh,
So yeah, so Dar's business is tapping into what people call the creator economy or influencers. So he built a business about 7 years ago where the content he was making was being distributed and is being distributed across major social platforms, right? Which is really where Gen Z and Gen Alpha are all consuming their content. You look at any piece of data, it'll show you there's a big hard difference between sort of what older Gen X and boomers are watching television, cable, that kind of stuff, and what the younger audiences are watching on these digital first platforms. And that's not even including things like gaming, which I think we think expands that even further. And so when he started his business, it was very mission oriented. He actually, if you hear Dar's story, which is really inspiring, he had a kind of a tough life. He came in as an immigrant, person of color, religiously persecuted, and all those stories you hear about immigrants and all the struggles they go through, his family went through as well. He ended up starting to build businesses, had some work, had some didn't work. But as he tells the story, he's like, I did everything wrong on my journey, right? Like, he's like, I got into business with the wrong types of people. I got taken advantage of in Ponzi schemes. I got in relationships with the wrong side of people for the wrong reasons. I got in trouble with the law. I got out of trouble with the law. And so 15, 17 years ago, as he sort of says, like, all the wrong things, right? So he got to this low point where he was depressed, had medical issues, bankrupt with $600 to his name at 30, right? And he got to the lowest point sort of any of us can get to. And he built his life back up, met his amazing wife and co-founder, Laura. And they built the first businesses that he built were actually in the beauty and cosmetic space. They built a successful business. But Dar just really felt this need to give back because he's like, in my lowest points, I read stories and followed stories of other people, whether they were entrepreneurs or, political figures or historical figures, and like all the adversity that many people have gone through. He's like, and even worse than the things that I had done and gotten back to success. He's like, and so I wanted to give back. And so he started actually creating content like a lot of creators do, not necessarily because they're mind are like, I'm building a business, but because they had something they wanted to say. In his case, he wanted to give back around you can have your life go wrong, you can have all the world sort of against you, and you can rebuild and sort of be a positive influence in the world. And it just turns out that was a kind of COVID window. It exploded, right? Because the world wanted positive, friendly content that they felt safe with, that they could get around. And that business sort of exploded. So within his first year, he was like the #1 creator on Facebook. His second year, he was at #2 behind Jimmy, Mr. Beast on YouTube. But the thing that's different than Dar than most other creators that he's not in front of camera the whole time, right? So he's more like a Tyler Perry, right, or Shonda Rhimes, or like so he is the auteur who can be on camera, but he also is just producing this massive volume. And the thing that makes it even more interesting is that scripted is the hardest, most expensive thing to do in traditional media. And Dar's currently producing it at about 1/50th to 100th the price point. And so in that is where you're seeing what's happening in the creator space, where you have these creatives who are coming up with the means of production, very low cost, taking entrepreneurial risk by themselves, building not only content capabilities, but distribution capabilities. Because once you have a channel of a certain scale, you have promotion power. So it's unlike traditional creative where like the creative is attached to someone else's distribution power. Here, the creatives have their own distribution power. And so today he's got this huge footprint. We talked about statistics. And, the most impressive thing is you see his facility. You see how they're cranking out television scale content at a level that traditional just can't do, right? Because the price points are lower, the audience expectations are a different site. It follows sort of different methodologies and different production mechanisms. And we're just seeing that repeated time and time again in the creator space, where these entrepreneurs have built a business in a very different archetype than the traditional value chain has.
That is fascinating. In fact, one of my questions was going to be, are you really in the entertainment supply chain? Because, I'll tell you why that provocative question. It was because everything from the outside actually looks like, the whole supply chain in motion. There is an understanding that there is a development process, production, post, and then of course, all kinds of distribution mechanics and merchandising and a host of other related businesses. And yet it looks and appears so different in so many ways. What really blew your mind when you compare it to the traditional side to Dhar Mann Studios?
I think the first thing you have to understand is that these creators grew up like with their audience, right? So they are the passion of their audience. They are the passion of the people who are around them, right? So they care mostly about speaking, just like we do, speaking to that audience, deliver upon their expectations. Because they have this direct relationship with them. The second thing is that they're beholden to not just kind of creative expectations, which any creative is, but also to algorithmic expectations,
Right.
which is sort of a rapidly escalated version of the historical distribution in marketing, right? Where you're like trying to understand what the audience wants, but also trying to understand how it's going to get communicated to the audience and processed to the audience. Mm. And so they sort of have that DNA from day one. Like in a traditional model, let's say you're a writer, it doesn't mean that you don't have those other skill sets. I mean, writers are unbelievably intelligent, but it's so been productized in the traditional value chain that a writer writes. Yes. Right? A finance or finance. It's like everything's sort of segmented.
Yes.
With like sort of these factory lines that don't get crossed generally. Whereas for these digital creators, when they start their business, they're all the things. They're everything, right? They're the writer, the producer, the photographer, the editor, the shooter, the marketer, the distribution. And so when they scale their businesses, partially because the economics of digital, right, are very different. So you can't afford lots of headcount. But the second is because by process, they sort of have more multi-hyphenates around them. And this is sort of the historical pattern of media, because if you look at, say, like feature films, right? I just watched a feature film in the theater, right? Like there's like 1,000 people in the credits, like 1,000, right? And then you watch a television show, there might be a couple hundred, right? Then you watch a cable show, there might be tens. So you just have this exponential logarithmic curve as the cost structure shifts. So you get to digital, it might be like 2.
Wow.
Right. So you can't have a lot of specialization when the team making like a half hour of television has 4 people. Right. Because it just the economics and also it makes us for a bit of a different mindset on sort of how the team does things. So like, Dhar himself creatively is overseen, I think the last count was like 2,000 episodes.
Jeez. That's fascinating.
When you think about it, right? Even with the writers' help and stuff like that. So that means like the ideation and thought process that has mainly come from like one human being. Whereas in the traditional value chain, like, I think today, The Simpsons might have 600, 700 episodes over like 30 years.
Right.
Right. And Dhar has 2,000 over 6 years.
Fascinating. Yeah. That is just a very different unit economics and a very different scale. Wow. I mean, there's so much to process there and so much to ask. One element that I was super curious about was, so how's the enterprise structured in that fashion, right? Because, again, you mentioned the silos that exist in traditional, media companies. How is, a digital media company, differently structured? Because, again,
it's funny, digital media companies look like traditional media companies, right? They have like a creative team and a production team and a finance team. They look like them. Mm-hmm. They're just like 1,000 times leaner, right? So like, the HR team might be a one person,
Right. That's
not
right.
100, right?
Yeah.
So,
That's right.
and then the other thing is that they run, if you think about traditional production, they have to run at the efficiency from an operational perspective, probably closer to like daytime or talk shows or news magazines, where like it's it's about not missing deadlines and everybody sort of getting efficiencies in order to kind of make things produce at that price point. And they have a tendency to be highly verticalized, right? So you don't see creators being like, "Oh, I'm going to take a pitch
Mhm.
and then I'll buy it." No, they come up with the idea, they write the idea, they produce the idea. So they're all like particularly when you get to the scale ones, like a Mark Rober or us or Dude Perfect, they're pretty vertically integrated. So if they were all in the same area, it would probably look like the feature film industry in like the 1920s, right, where everyone's just sort of building these efficient operations
Right.
while they're trying to figure out the business. It's very similar, and in fact, in Burbank, where we are, there's gonna be like 4 or 5 digital studios over in that neck of the woods,
Hmm.
who are working at a very different pace and very different economics than the traditional side of the value chain.
Right. And this the latest studio that you folks have invested in and built, the 100,000 square feet facility. Talk a little bit about that and how did that come about? What was happening prior to this sort of facility coming in, or is it just for a larger scale, for more shows? How do you
Yeah, so
decide?
for like most creators, right? They generally start shooting somewhere, their house or whatever. So Dar's content was always real world scripted, right? So when he and Laura were running their beauty businesses in their apartment, they were also shooting Dhar Mann in his apartment, right? So the bedroom was a hospital, and the living room was the restaurant, and the
Right.
kitchen was so they used all the rooms. And actually, part of it was the company was growing; they're running out of space. Both companies were growing, but the other issue was that with COVID, like they were using like every open space in their apartment complex, and like when everything got locked down, they couldn't, and then you
Right.
couldn't rent things.
Hmm.
So they took the big risk to go rent their first sort of warehouse to shoot in. And the actual plan was, I think it was like a 50,000 square foot studio. It was only to use like 10% of it, right? Because they were small. They're like, we're going to build like 1 or 2 sets,
Right.
right? And we're going to rent the rest. So taking a big risk. But it turns out they build a set and then they have success. They build a second set and a third set and fourth set. And so they sort of organically built relatively quickly.
Hmm.
And then with the explosion of COVID, everybody got locked down and the traditional media stopped producing. All the kind of eyeballs went to the digital platforms. So people like Dar, who had started these spikes, had these huge, like massive growth curves. And so that funded kind of the build out of the studio because it's a very large physical footprint with
Wow.
a lot of investment behind it. It was all funded essentially by COVID advertising and kind of growth. Um,
Fascinating.
but even to this day, I mean, there's now 3 stages and then a
Okay.
fourth off location.
Huh.
And then we use the whole facility. So the parking lots are part of our shoot complex and that kind of stuff. So I think the last time I checked, we had something like 66 distinct sets.
Whoa. That is insane. Wow. And that okay. Lots to process there. One aspect was really relating to also just let's talk about 2025. You know, how would you measure the overall output of the company from just content perspective, right? I mean, how many shows, how many scripted series, how many unscripted?
We will do probably 200 hours of programming this year.
Wow. Wow.
Yeah,
And
probably
then,
200.
given that and the average episode is
About 25 minutes, 22 to
25 minutes.
25
Okay.
minutes.
Okay,
It's
got it.
all it's a television half hour.
Right, right.
It
And this
depends on the platform, but on average, like our YouTube content averages a little over 20 minutes. And then our other short form stuff varies below that. But
so this includes all the segments, unscripted. You've got some branded entertainment business as well. So that's also
we do
wow.
like most creators, right? So we have, because of our footprint, you
Right.
can imagine the ability to integrate
That's right.
anything organically into our footprint, right? Because because if you think about it, we do multi-generational content, which means from kids to adults. So you need everything. I have homes, schools, garages, retail establishments, malls. So like it's one of the jokes is like there's no brand we can't integrate except maybe like sometimes we're like, I don't know if we can integrate. I'm like, well, no, we do have a jail. It's like, oh, I guess we could, right? So it's like, um, and so obviously, like most creators, we have branded integration work that we do, and then we also have an agency called Fifth Quarter that does services for other large creators to help them scale their businesses by helping them create, syndicate their content or move it to other platforms as well.
And I mean, at this point, from an content experimentation perspective, any new genres, any new formats, new themes?
So it's interesting. If you look at Dhar's content,
Right.
uh, we've kind of done every genre,
Yes.
even though we run, standalone episodes. So you look, there's romance in there. There's, thriller type content in there. We did last Halloween, we did kind of like a Goosebumps type format. We do biopics, we do historical fiction. So we sort of done all of the formats. We do some limited run series to check genres, and we actually have just brought in like 3 new executives to start developing more content. Part of that's because we're expanding footprints, right? So we just announced a big fast channel deal with our partners at Samsung TV Plus, which is the largest fast channel distributor in the world.
Right.
We have our platform businesses on both Facebook and YouTube are pretty sizable. So we'll probably have the largest creator that has like almost parallel businesses at scale on 2 significant platforms. And so we're going to continue to invest in scripted and positive content. That's our MO, and you'll be seeing more versions of it on different platforms coming out over the rest of this year. And then the other thing we're working on right now is working on a podcast, which is another format that we're coming up. So a lot of different areas where we're generating new content.
Fascinating. And you hit a little bit about the footprint expansion as well. From a geographical perspective, are you sort of going into new regions, new languages? How do you sort of see that come up?
Yeah, so when you're a digital creator, there is no region because you're global on day one.
Yes.
It's global on day one. Depending on what country you're in, you have a tendency to produce for the country you're in because that's where you get your brand deals and things. So we are global footprint, mostly English language, you would imagine. Although we do dub into 7 different languages. So we have a big footprint in India, we have a big footprint in the Philippines, we have a big footprint, but our biggest footprint is English speaking with mostly a U.S. audience.
And then, in terms of, again, this is supply chain stuff. So, when you look at those 7 languages, is there a tendency to sort of try out different technologies? Are you trying out different partners? How do you?
Yeah, so we've done everything. We've tried, what I call traditional dubbing.
Right.
And we've done all the way through the platform tools as well as other third-party, AI dubbing tools.
Right.
So we kind of use everything. So right now we're a combination of tech dubbing and some internal expertise. So it's partially insourced, partially outsourced.
Okay, that's super helpful. Again, we have a very large community from the localization industry, both traditional as well as a lot of new tech and new solutions that are coming up.
Yeah, like we think that the AI side of the fence in terms of like dubbing is basically what's going to happen over time. The tools are getting better and better and better and better.
Yes.
Ultimately, I believe that the platforms will probably ingest that stuff. Like, so ultimately, because it's in their best interest, like upload this podcast and instantly whatever language you want. So first they'll get the dubbing of multiple languages down pretty well. As you know, from a monetization, they don't have to get all of them. They just get, once they get sort of the big 5 or 7, that sort of drives, and that'll drive the investment into the subsequent languages. And then the next thing will just be how they're going to use AI mouth replacement, which is getting closer and closer. So
that's right.
I don't know what the timeline is, but there'll be a point where for a creator, you will just upload it, decide what language you want to be in, and it will upload and the mouth will be replaced and you won't be able to tell the difference.
That's right. And we're seeing such rapid sort of advancements in those technologies. Again, every month we see multiple new companies come in to solve that problem. So yeah, I would totally.
Yeah, I mean, like one of the ones we work with, like they're in just a year, I'd say they're the tools in terms of what changed and sort of the emotions they were able to get out of it was like exponential changes.
Fascinating. And then a related question is, live entertainment. I mean, is that how do you sort of see that? Uh,
Yeah, so our primary focus is like, serving our fan base. So we think a lot about like what a in real life experience would be with the brand.
okay.
So a lot of different options could be from, hey, I'd just like to see your top shows reenacted like a play, to, hey, I'd want to be in one of them, to, hey, I'd like to see some of your talent. So there's a lot of things. We had joined up with a couple companies in the touring space last year to start looking at what we're going to do in the space. We haven't decided yet, but we're
Okay.
exploring it.
Understood. Understood. And then you mentioned podcast, fast channels. Again, I presume a lot of distribution relationships will start coming up. That will be a big focus, in the later part of this year. Is that right?
That's right. That's right.
Okay. Understood. So when you look at international expansion, Sean, is this all organic? Are you sort of looking at inorganic growth as well, partnerships? I mean, is there like a sort of method, or are you sort of being opportunistic in terms of how some of these businesses are expanding and even inbound?
It's mostly organic. It's
Okay,
mostly organic. The international expansion for most creators
hmm,
typically starts first with audience expansion. Then you start looking at language dubbing. There's not a lot of and then if you have a big global business that, like, Mr. Beast, or
hmm,
the Sidemen or something like that, you start looking at like consumer products, because that travels kind of
that's right.
across pretty easily. Some of the other things are more difficult, right? It's hard enough to get your talent to do a live tour, but a live global tour is even harder, right? So, and there are the sort of approach to it has a tendency to be CPM or RPM driven, right? Because the markets have very different rates. Like, one of the challenges for, say, for example, for a Latin American content, is that the ad market down there is very weak compared to even what the U.S. Hispanic market is, right? So
Right.
it monetizes at a much lower level. Or, if you look at, say, India, which I always remind people is like the largest English speaking country in the world, but the monetization is like 1/30th. I mean,
Yeah.
it's really significantly lower. So even though you got a huge increase in audience, it doesn't compensate for sort of the RPM, CPM differences. So that's usually the biggest restriction for not even just digital, any company going global. It's like, what cost for investment on one local level? What amount of local expertise do I need? When do I need it?
Hmm,
Those same questions apply to a creator, but again, they're thinking of different economics. So,
right.
you know, I saw a deal the other day that we're going to talk about. Like, somebody was talking about, okay, could you license Dar's content into China because you can't do it directly? Like, that would be something we would look at.
Okay, understood. So, in terms of, just again, we've got a very diverse set of folks who are listening in to this podcast. What kind of partnerships are you sort of open to? What kind of partnerships are you looking for? If there is an inbound sort of outreach to you.
Yeah, I mean, look, we're looking for anything that helps grow the audience and then
Okay.
grows our content. So generally, that is, like, we've had conversations um, with some countries that want to sort of create, because you can imagine our content goes globally really well. We perform really well in a lot of languages. So, conversations about, investing in a version of us in local market, right? So someone wants to make a long-term investment. It's like, okay, well, what if you built Dhar Mann Studios in Dubai, right?
Right.
What would that look like, right?
Right.
Because we already know the audience is there, and what's the
Right.
investment contract. Those are interesting conversations. I would say conversations around sort of brand relationships, particularly in that kind of family
Hmm,
content space, is interesting to us, particularly long-term ones. Like, we're very equity-oriented thinkers. So, you know, we don't really want to build a business like off one-off brand deals. We're really like, we want to get in with a brand, understand the customer journey, understand what people need,
right.
understand what their return on ad spend needs to be, and so really kind of use our footprint to help them drive what they're trying to discover. Um, those
Understood.
sort of things we look at, and then we're always, because of our footprint. at looking at, how do we make original content for other platforms, right? Should
Right.
we be making content for Hulu or a Netflix or somebody on a global basis? Should we be making, vertical dramas, looking at all those different areas?
Hmm.
And then the last place we look is like, as we're scaling, is like, are there M&A opportunities to help us build even a bigger creator studio platform is the other place we look.
Understood. Understood. Now, I'm sure a lot of folks are listening very carefully to everything that you're saying, especially on the partnerships piece. But again, this one of the things that we've actually seen is just a lot of interest in cross-border partnerships,
Yeah.
especially on our platform because it's essentially suited for that.
Yeah.
The one element which I was curious about was in terms of what your view is on micro series. There's been a lot of buzz about super short episodes. Is that something that you're dabbling with already, or
So we explore it, right? It's an emerging market in the US. It's obviously huge in China.
yes,
It's a pretty established players in market in terms of the Chinese players who've been at it for a while and are sort of spending on it.
Hmm.
We think it's a very interesting model, but we're trying to figure out the right way for us to enter it.
understood. Understood. Okay, that's fair. And again, the China is perhaps the biggest market, and we're just beginning to warm up to those ideas here. Um, one slight sort of sidebar conversation. When you look on the other side of the fence now, to where you were, on the traditional side, from your prior experience, what do you think is broken? I mean, if you said, is it the fact that box office is broken? Is it the fact that cable and that entire monetization of pay TV is broken? Clearly, the things are not in the right spot. Are you hearing that from, I'm sure, a lot of your colleagues,
Yeah.
ex-colleagues?
I think, usually the way these things happen when there's sort of tectonic change in industry is they happen slowly and then all at once. And that's
Yes.
essentially what happened here. Like it's not like people in the industry didn't know that digital was coming for 20 years. It's
Yeah.
not like they didn't watch newspapers get decimated, right? And so uh, what I think is broken is, well, let me start about what's fixed. First of all, there is not less content being consumed, only more content is being consumed. So there's never been a better time as a creative to have an opportunity for your vision to get out. Like you have the means and mechanism.
Hmm.
Uh, that's exciting. I think the challenge is that the historical structures were all set up with some sort of either political or geographic or structural sort of monopoly, duopoly that sort of made the system work. And by the way, when it sounded like the economists extracted a lot of rents from the system, as they like to say, right?
Right.
The cable model, for example, was a beautiful double revenue model. But the media companies, of which I was at one, we broke it.
Hmm.
Right? The consumer experience started getting worse. It's like all of a sudden you watch an hour of television and 22 minutes is commercials. The cost per cable thing is, but had cable thought about itself as a consumer product, I'm like, well, the kind of per capita cost needs to come down over time and the consumer experience needs to get better, then we'd probably all still have cable, right? Because that cable wasn't terrible, but until streaming came along, you could have on demand. All of a sudden, it's like, well, this is terrible. But if cable had just done on demand,
Right.
like Netflix and Hulu, none of these things would exist. So part of it's self-inflicted because of the structural problems. I always say it's not because there's not smart people. Like I never met a smart person, all the CEOs I worked for who didn't know what's going on. I always say this is a fiduciary problem, is that incentive structure for any business going through change, when it's incentivized on quarter to quarter performance,
Yeah.
disincentivize risk and innovation.
Hmm.
So, I once told someone, a mentor of mine, when he was asking me about when I was launching a streaming product, like how I felt that the kind of core head of distribution was, quote, out to get me, not for real, but in facetious sense.
Yeah.
And I looked at him, I said, if I had that person's compensation program,
Hmm.
knowing what I know,
Hmm.
even knowing the right answer for the consumer, you know what I would do? Exactly what that person's doing to me, because there's a multi-million-dollar number tied to it,
Right.
versus sort of like taking the other approach loses them their bonus and their sort of upside. So you have a structural problem and an incentive, which is not unique to the media business. I would argue, part of the U.S. capitalism, market orientation is a very short-term interest.
Hmm.
And there's pros and cons of that.
Right.
I think the other issue is that when it suddenly from what slowly to everything went wrong, right? The ad market came down.
That's right.
The massive infusion of money into streaming ended.
Hmm.
Cable stopped working, right? There was a strike, which for very valid reasons, but unfortunately the major media companies stopped producing content and they realized it didn't hurt them that bad. So then they didn't step back up. So that was an inadvertent. So like I tell people, it's like the 4 jets of the airplane like turned off within like 18 months of each other, right? And it doesn't matter how great the plane is, the glide path still leads you to a crash landing. Right. So I think the challenge is that what happened is that by the time it broke to this very fractured niche attention span, we still had the cost structure from the mass attention span.
That's right.
It doesn't mean there aren't things that have mass attention span. It just means that we go from a majority of the world being mass attention to the minority of the world being mass attention, the rest of it being sort of moderate to niche attention. You just have to have different economics and different ways of working when you're at that model. Like, by the way, it's not new news, right? So Bollywood makes more movies than the US market does. They do not produce them at $300 million a film.
That's right.
They do not.
They do not.
Right? Because of the constraints of the economics. But by the way, infinitely more prolific film industry than the U.S. film industry. Why? Because they have a different economic style. Again, it's not like you can't watch some Indian films and be like, wow, that looks like an American blockbuster. I've watched a few of those, right? But the majority of the market was created for the Indian market, which is like people don't have, like, well, I took my family to the movies. It cost me $120 to go to the movies last weekend without even buying food, just on tickets.
Yeah, that's right.
I was like, you can't run that in India. So I'd say today the U.S. is sort of getting to a fragmentation where like people have money, but it's a smaller amount of people. So you can't charge them $120 for something they think is like a $40 experience. So that's the ultimate issue, in my perspective.
Fascinating. And I mean, again, it's not as if people aren't watching content. It's essentially the economics that's broken. Yeah,
they're watching more.
Right.
They're not watching less, they're watching more.
And that's why, Sean, I was really looking forward for this conversation because, if the economics has to be changed, then companies like Dhar Mann Studios are really inspiring that whole thought process. And I can tell you there are a host of CEOs on the traditional side that I meet who are sort of privately saying that, hey, we want to pivot. And we want to pivot into a AVOD, YouTube aided business because we understand that. But that pivot will require them to sort of break the assembly line of how they were producing stuff earlier, and sort of reimagine that and recraft that all together. Maybe exactly.
The example I use people all the time, like people talk about YouTube content, and they'll be like, "Oh, it's not high quality," or when I came into the business, people would ask me, "Oh, were you brought in there to make the content better?" And I'd just laugh. I said, on whose criteria are you making that decision? Yeah. They're like, what do you mean? I said, if Game of Thrones would work on YouTube, it would work on YouTube, but it doesn't. Yeah. And I said, so that's not a commentary on quality because Game of Thrones is a great show, but just wouldn't work at the economics and audience function on YouTube.
That's right.
And I said, so like, that's not a quality question. The question is actually, what makes you believe that quality, as you perceive it, which is like more money spent, right, is the actual transactional thing that the audience cares about? Like, tell me all the time is like, and maybe it's because I grew up overseas, right? So most of the content I was exposed to as a young kid, a small percentage of it came from the U.S. industry. The rest of it was locally made and locally grown. Right. So like, that's the rest of the world, right? Most of the world didn't grow up watching 24/7 Game of Thrones on HBO. They grew up watching like a telenovela or, a local film, right? And so what they care about is great story, great characters, and the things that are culturally resonant to them.
That's right.
And yes, you can make something more spectacle, but it doesn't necessarily mean dollars spent equals success.
That's right.
And yet and that's one of the challenges in crossing over to digital is you want to walk in and be like, oh, you need like 9 APs and 7 writers and all that stuff, and it just economically can't handle it. You're like, well, the quality won't be as good. I'm like, for who?
Hmm.
I said, because one of my writer friends said this to me once. He's like, I remember saying to someone who said, like, the quality isn't as good as YouTube until I pointed out to my team. He goes, but the thing they said it wasn't quality gets 3 times the numbers we do.
Whoa.
So what's the definition of quality?
Quality,
So
right?
that's one of the challenges, is that, again, the system was architected, rightfully so, for a world where those things made sense, right? More dollars, more quality, not generally, but like trended towards that direction. But in YouTube and Facebook sense, it doesn't, because the audience cares more about authenticity and the audience
Right.
than they care about, like, did you have perfect VFX?
Hmm. Hmm. That is, yeah. And I mean, I think as we sort of hit the reset button for some of these businesses, we are sort of seeing also, a fairly innovative approach with companies like Banijay, for instance, right? Where they have these massive studios, but then they also keep popping indies from different markets and different countries. And my hunch is that kind of approach is also an interesting way to keep a reality check of the economics of those businesses, which are operating beautifully economically, at a local and regional level. So again, the jury's out on how some of the traditional businesses are able to pivot.
One of the painful things we learn time and time again, and by the way, capitalism does this pretty well, is that if there's an economic incentive, there will be knowledge transfer, and then there'll be cost arbitrage, right? Like I tell people, it's like Toyota, when I was a kid, was a crap brand that made crap cars.
Yep.
Today, it's considered to be the highest quality thing in the world. It's like, and you think about it, it's like you're only talking about it. And it was like a 25-year period. They went from the people who made crap cars to the only cars considered reliable.
That's right.
That's right. And they had some cost advantages, right? And automotive, which is a 100-year-old industry, is like offshoring to Mexico. Witness all the tariffs that we got. And this isn't a commentary on what the impact of jobs is. That's a whole different conversation. But just from a pure economic conversation,
right?
Same thing. Chip manufacturing only could happen in the United States. Now it doesn't happen in the United States. Why? Because the knowledge was able to, of the most complicated thing, the knowledge was able to transfer, and now it can be done more cost effectively. And so it's, in your nightmare scenario, it's hard, to your point, to imagine that aside from language of front of camera talent, that production can be learned, quality can be learned in the Hollywood sense of it, and moved somewhere else. Witness, like, most reality game shows are now shot in Ireland, right? Like, if you want to shoot a big feature film, they're going to shoot it like in Australia or Bulgaria or like in Atlanta because of the cost savings. So that's one of the things that's a little challenging for the industry, is that it's starting to realize the geographic and language and skills barriers are going, like they do in every industry. They go to zero at some point.
Right.
And when they go to zero, people make decisions based on, hence capitalism, the economic ramifications of the bottom line more than anything else. And that's the hard thing that the industry is going through right now, is that places that I grew up, that I love, like LA,
right,
the production's down 40% there. And it's hard to see it coming back, unfortunately.
That's right. And we're seeing, some of these productions move to a host of new markets, new countries, new locations. And that switchover is happening so rapidly.
It's heartbreaking, because I tell people, like, these are my friends and my family and my coworkers and my colleagues. And it's so, it's a scary time. It's a really understandably scary time. And as I talk to my friends, and even the decisions that I made in my career, I was like, you have to follow the customer, because you can't force them to do something else, right? I can't tell the audience, like, you will only watch stuff in movie theaters, as much as I love movie theaters.
Yeah. No, we can see that from our vantage point as well. But so Sean, in this last segment, I want to sort of focus on two themes actually. One was really relating to the economics part, in terms of how do digital businesses make money, right? If you can maybe list down like the top 5 areas that kind of bring in money into digital business like yours. Then
go ahead.
And then pose that a little bit of sort of crystal ball gazing with you, just in terms of what's coming up. So, but let's start with the money question.
Okay, so most creators make money off advertising as their primary revenue. That's either platform revenue, like money that YouTube gives you in their AdSense, or Facebook gives you, or Spotify gives you.
That's right.
And then they make money in ad deals that they do directly. Hey, you want to integrate in mine? Everything else after that is usually a derivative, some sort of direct to consumer. So I will launch a consumer product. Mark Rober and Crunch Labs buy this consumer product as a direct relationship. Or I will partner with a brand like Jimmy just did with Jack Links, where he's going to push that brand to his audience. Or like Dude Perfect, I'm going to go on a tour. Come see us in tour. So the general two big buckets are ad revenues, either direct or from platform, or direct to audience relationships.
Okay.
Those are the big revenue drivers. And by the way, there's a lot of variability in there. There's probably 30 things in those two giant buckets, but that's the two ways generally to look at it, how they generate their revenue.
Understood. And then from a cost perspective, the cost equations are largely just the content creation, and then I'm guessing digital marketing would be a fairly large component of.
It's actually very small. Most creators are just using their own inherent distribution footprint to promote.
Oh wow, that is
very rarely do they buy media.
That's fascinating. Again, that's great insight. Actually, okay, understood. And then from a future gazing, crystal ball gazing perspective, just in terms of how the year is going to be for the company. What are the from a roadmap perspective, what are the big new initiatives that you're sort of planning?
For us, it's making more great scripted content. We kind of started the conversation. We're going to push out more. We're doing a big revamp on our main and Facebook channels over the course of this year in terms of new content approaches that we're taking that are resonating really well. We're going to launch new genres and new channels. Then we're going to go into new content on new distribution platforms, like onto Samsung. We're going into fast channels. We're going into podcasts. So essentially, just be a continuing of making great, positive, inspirational content against our brand, and just moving it onto more platforms and doing more original content for those platforms is really the main initiative. I think we'll continue through our fifth quarter agency, to support other creators and help them take advantage of some of our efficiency. And then we're looking out in market, see if there's other opportunities to either join with or acquire other creator studios and use our infrastructure to help them scale up, because we're really long on the creator market. We think that this is, the future of the business, and we're just debating the timeline.
Fascinating. And I'm guessing that the facilities are open for those kind of collaborations.
We collaborate with other creators a lot.
Fascinating. Sean, this has been super exciting. I mean, again, I kind of knew what kind of questions our community would have. You actually addressed all of those in great style and great detail. So thank you so much for spending this time and all of the insights that you've been.
Thanks for having me. Thank you to your community. I really appreciate the time.
You'll be hearing from them for sure. I can guarantee that.
All right. Take care, Till.
Thank you so
much.
Likewise.